so we can see everything. That'll work. This is the Daily Financial News. This is a news show that you could count on 7 days a week. Yes, that means Saturday and Sunday included. I try to shoot for 12 to 15 minutes. I try to give you a color of what is going on in the economy, what is going on in the world, what's going on with the consumer, cost of capital, and anything else interesting I read. Again, this is now over 1,000 days in a row. There is a playlist on this channel called the Daily Financial News. Check it out. You can see what we were talking about for years and years and years. We're not always right, but we always try to have some fun. So as I was reading information this Sunday morning, a couple of things struck my attention. I read an article that purports to be written by Grant Cardone. My guess, it was written by someone and had Grant Cardone's impact. That doesn't matter. Grant Cardone shares his secrets to getting wealthy. I'm going to give you the 5 things that he shared, give you my little color. But I want you to understand something. This channel is about building wealth. Wealth is very different than rich. For me, rich can be an income. I happen to live in the Silicon Valley. I have lived through the dot-com excitement. I have done Web 2.0. I have been here. I have seen engineers, project managers, salespeople make gobs of money. Very, 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 very few of them are wealthy today. Most of them got caught up in keeping with the Joneses and doing stupid things. I live in an area where, like we talked about yesterday, you can make 250 grand a year as a family and live paycheck to paycheck. It is a choice. And why do I bring this up? I want you to be very clear. Rich Dad Poor Dad's cash flow game teaches you the following. You can be a teacher, a policeman, whatever it is, make 50 grand a year and become wealthy. Wealthy is about having your passive income exceed your expenses. And if your expenses are 36 grand a year and you have passive income of 48, you win and you are wealthy. People talk about being a millionaire. I don't give a rat's ass about being a millionaire. I want to know that my passive income exceeds my monthly expenses. That is the magic. That is the goal of this channel, right? That's what we are trying to help people do. So 5 things that Grant Cardone talked about. 1, pay yourself first. I got to tell you, pay yourself first has been mentioned for like 20 years. And I never really got it. I'm like, how should I say this? I allocate money to my 401k. Is that paying myself first? Well, I told myself it was. I think what Grant Cardone is really talking about is, hey, take your earned income, allocate it to the side so you can invest later and do that up front. Many people do it last, right? Many people look at, hey, I make this much, here are the bills. This is discretionary. I'll take from there. Grant's like, no, line 1, pay yourself first. Number 2, live on 20% of your income. Well, that's not easy to do. I was religious about cutting expenses, and I was lucky enough to get to 50%. I could not imagine living on 20% of my income. So what I'll say for you on this one, if you live on 90, live on 80. If you live on 80, live on 70. Most of us can live on less. I call it needs versus wants. We went in for a decade and just were vicious in cutting our wants. We took care of our needs. Our daughter had what she had. We were good. But yeah, live on less. 20%. Who lives on? I guess Graham Stephan. He lives like on 5% or something. But do we know anybody who really lives on 20%? I mean, like any normal person, not like some super athlete or something. 20%. Wow. Number 3, don't lose money. Well, again, that's cute. We are also telling people to invest in assets, and generally speaking, investing in assets is risky. It's not riskless. If you don't want to lose money, are we supposed to just do treasuries? Because you can lose money in real estate. You can lose money being a buy and hold investor. You could buy an asset, have a turnover, have one bad year. It could happen. I would tell you here, educate yourself, don't gamble. Build confidence in yourself. There is a process to do this. Invest for cash flow. Number 4 from Grant Cardone. Absolutely. The whole trick or process that Grant pitches that I fully believe in is bust your ass during the day, live on less, save, right? Cash flow, and then buy assets that produce income. Genius. And then finally, the goal of the wealthy is have passive income. He says passive income greater than earned income. I don't really care about that. If you love your job and you want to stay, great. I say passive income greater than family expenses. That is wealthy. If you want to keep working and you're wealthy, go nuts. That's on you. As long as you are happy, as Gary Vee says, you win, in my opinion. Next up, asset managers. Asset managers are increasingly selling out of their stocks and staying in cash. Percentage points. Their cash balances are 5, 6, 7% higher than yearly averages. That tells you something, right? We had earnings for Microsoft. We had a pre-announcement for Microsoft, Snap. We had Salesforce.com talk about currency. We have a report on Apple's App Store being a little iffy in China. Yeah, we have a lot of asset and money managers sitting on cash, which is really interesting because of the whole cash and trash, fully invested stuff. Crazy. Next, Phoenix. Phoenix appears to finally be having a slowdown. Folks, I watch a lot of folks. As you know, both Pace and Laura Morby have been on my channel. Laura Morby was a weekly guest on Sundays before they had their latest baby. Shout out Monday. How you doing? That's the name of their child. But it looks like Pace just put out a video yesterday saying they have 5 homes that have no activity. And these 5 homes are in the category where they used to get 40 or 50 offers first day listing. The great real estate slowdown has started. It is starting at different places at different rates, but it is here. Protect yourself. Get better deals. Do the work. Then lastly, I had to chuckle. President Biden, I'm going to read his full quote because this is not quite his full quote. Where is it? Where is his full quote? Oh, it's on the back page. This is President Biden. I think it was yesterday. Well, I read it yesterday. The economy is starting to shift into a period of stable and steady growth. I want to ask him what economy he's talking about because I think we are downshifting. It is not stable. It is yucky. It is messy. As the president of the United States, he has to say that. I wish all of our politicians would just be honest with ourselves. Go, guys, we printed too much money. We rained helicopter money on folks. Inflation was never transitory. We lied. The notion of a soft landing is a joke. It's going to hurt for 6, 9, 12 months. There's a gas station in California. I think it was Mendocino County, $9 a gallon. Stable and steady growth. I don't get it. I don't see it, but we'll eventually get there. We will rebuild. Recessions do end. Good times last better than come back. Good times never last. Bad times never last. It's okay. This is part of the cycle. Forest fires happen. We got to clear out all the dead wood. It's crazy. David Sachs from the All In podcast fame is out reminding people that this is going to be the third nasty recession. He's talking about the dot-com and the great financial reset or financial crisis, GFC. And he's like, hiring freeze, pay cuts, layoffs, zombie companies being sold or going to zero. It is going to be painful. The Silicon Valley, get ready. We are going to be talking about things that we haven't experienced in a while. And as a hiring manager, as an executive who went through recessions, first thing we do, we close open recs. Second, if we can, we do talk about pay cuts because we would rather cut everybody 5% than lose people. 3, we will have layoffs. And it will be very interesting, in my opinion, to watch the layoffs this time. Many companies said, work wherever you want. Then we have Elon Musk saying, come back to the office. It is going to be very interesting to see how Office work versus out of sight, out of mind. Who gets laid off? Who doesn't? It is coming. And again, there are plenty of publicly traded companies and SPACs. There were 25 SPACs that issued going concern letters. Folks, that's not good. That is basically a company starving for cash and they're going out. Some of these companies will be sold for pennies. I was at one of them during the dot-com crashes. We were a month away from our road show to go public. The recession hit. We got whacked. We had to do layoffs in 90 days and we got sold for pennies. It was painful. It will happen again. Some companies will go to zero because their CEOs do not make hard decisions. Some of our CEOs in private or public companies today are not going to take their foot off the gas and they're going to run into a brick wall and everybody's going to get laid off. We have peacetime generals and wartime generals. It is time for somebody to make hard choices. You have to survive to thrive, and I'm afraid many people won't. Worldwide inflation. Brazil's Fed funds rate, or what we would call their Fed fund rate, was 2% 9 months ago. It's now going to 14. We went from 0 to 0.75. We'll probably be at 1.25 in 2 weeks. That is crazy. South Korea, record inflation, 5.4%. Germany, record inflation with 50% of German citizens backing off consumption. I see a worldwide recession. China first, Europe next, North America next year. Barbara Cochran of Shark Tank fame. She's actually written a couple of books too. I don't remember what they are, but I read them both. I think she has 2. She is talking about home ownership being part of your retirement savings. She's talking about get the chip, get in, trade up, trade up, trade up. Home equity becomes a retirement fund. If you don't know who Barbara Cochran is, historically, she was a real estate agent, real estate brokerage, solar brokerage. She's obviously very, very pro real estate. I am in the get on the property ladder, but do it smartly. This is not a time to continue the madness from the last 2 years. Overpaying, waiving conditions, all of that nonsense. Let the fear of missing out from sellers be your advantage. So I am not get on the property ladder at all cost guy. I am do the work, find a motivated seller, get a great deal. Don't do something silly. Anything else closing this out? Then the 2 last things, I guess 3 last things. First, negative news. I'm going to say this for a while, so some of you may be tired of it. When you see negative real estate news, I want you to do what I do. Every negative piece of news about real estate, I think, there goes my competition. It's a way for me not to be negative because I have been studying the consumer for 30 years. Consumers get greedy and nervous together. Every negative news article, I tell myself, there goes 2% of my competition. The last cycle, we had 4 years of negative news. And every day, I kept telling myself, there goes my competition. There goes my competition. And by 2010, I got to tell you, no competition. Everybody was gone. It was awesome. Next, 62% of Americans feel we are in a recession today. That kind of makes me nervous, right? Because I'm calling a recession next year. Consumers are 68% of the economy. Consumers can cause a recession all by themselves. It will be very interesting to see if our negative 1.5 is validated with a negative number in Q2. If we get a negative number in Q2, I am wrong. I took a shot. I was wrong. We will see. I don't see Q2 being negative, but it absolutely could happen. 53% of consumers are changing their behavior. They are going out to eat less, driving less. Again, this is something that can cause a recession all by themselves. So again, I might be wrong. Earlier in the year, I thought a recession was next year. But the more and more consumers that change their opinion, that change behavior, right? Consumer sentiment's one thing, behavior is another. if we have consumers change behavior right now, I might be off by a full year. Way wrong. We might be in a recession right now. I do not know. And then lastly, I want to let you know that I am thinking about having an event, at least a 1 day at a time rental, one rental at a time event. When this channel hits 50,000 subscribers, I will not charge anything for the tickets. At least I don't think I will. I just want to get to see you, get to meet you. I think we're going to host it in Vegas. I don't know when. It will be after we get to 50,000. Here's my deal. Because Matt and Dion are trying to help me. I'm game to spend $10,000 to have a party, to get to meet people, to celebrate. So that's my budget. That's my number. I don't want to charge ticket fees. At least I don't want to. But we'll see what happens. I want to celebrate, get to shake your hands, do some selfies. So again, I just wanted to paint this picture for you that we will do an event. If I can keep the cost under 10 grand, it will be in Vegas. If I can't, then we might do it in Fresno, California, where I have a way to make it super cheap. So just want to let you know it's out there. If you haven't subscribed and you want to help us get it there, hit subscribe, thumbs up, comment, get the YouTube algorithm working. We've got 3 interviews today. We've got hopefully Todd Baldwin. We've got a surprise guest at 9, and then Dan Bird back at 10 o'clock to talk about stocks in the stock market. Have fun. Bye.